Welcome to my channel. Time for Bitcoin.
Firstly, the central banks are taking liquidity out of the system and have been for a while. That has hit all assets. And so crypto down 75%, much like many technology stocks are around down about the same. So that's been going on. That's been putting the market under pressure. At the same time, when you get to the bottom of the liquidity cycle, if you think about it, if you think there's a bunch of people in the street saying, hey, buddy, can you lend me $1? And you've only got $5 and there's 10 people asking, well, 5 people aren't going to get it. And that's what happens at the bottom of the liquidity cycle. Those who really need money don't get it, and they blow up. So in June, we spoke in the aftermath of that. That was basically the blowing up of the liquidity cycle. Suddenly you find out that all of the people who were running leverage in crypto were getting blown up, and they couldn't get any money from borrowers, or they couldn't get any money, from investors. And so that had this huge ramification. So June was actually worse than now, because pretty much it triggered everything.
Raoul Pal is the CEO and co-founder of Real Vision and the CEO and publisher of the Global Macro Investor. He was co-manager of GLG's global hedge fund in London. He was one of the few investors to predict the 2008 mortgage crisis. Let's hear what he has to say about where we are now and where we are heading in the crypto markets. His opinion on the collapse of the FTX exchange is also very interesting. Let's hear his opinion on what happened.
So June was the actual damage, right? That was basically the nuke button to say, leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, Three Arrows Capital, all of them. But one of them was hidden, and we didn't know, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole, which is a staggering amount of money. Now, we don't know the exact numbers yet, and we won't do for a long time, but there were a staggering amount of money in the hole. And that was papered over by FTX. They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control and Alameda control, and then gave them a loan against it. That's what it first appeared, but the plot's thickened a lot since then. But so basically they actually went up under in June. So what we're seeing now is the end of the June thing. It was the bit that didn't happen that did happen, if you know what I mean. And then they gave them cash in exchange for that collateral, but that cash was customer money. Right now, we're in the realms of bad. That's what the story appeared to be. And I have been speaking a few times and said, well, you can kind of understand that if Sam Bankman-Fried is going to lose his entire empire in June, you might be psychologically pushed to do something bad in the hope that maybe you can avert it, right? If the 10% chance is worth it. But I asked the question a while ago, and I did this big Twitter Spaces, it is not clear to me that there wasn't systemic fraud in this whole thing to start with. The story is now coming out. It's coming out in waves, and again, nothing is verified here, but it's starting to appear that FTX was just a front for Alameda to capture customer order flow to give them an advantage. It's now becoming clear that FTX and Alameda, because we can now assume they're basically the same entity, which is very bad to have a trading operation that takes advantage of customers. We've also seen that they changed their strategy from being these lower risk traders doing arbitrage, buying one thing, selling another, or very quick trading, to big position takers. And it seems that the Luna debacle was them just providing liquidity all the way, and it blew them up. And they pretended it didn't hurt them. But it seems that Alameda itself had changed what it was doing quite a while ago and was basically a punter. Then there's the confusion of who all these people are, and half of these people don't check out properly. We then hear from the guy who's gone in as CEO, who's now the liquidating CEO. And he's like, I've done Enron, I've done all of these. This is the worst mess I've ever seen. So again, news flow's coming out slowly, but it feels like there was never any proper accounting. that there was never any customer positions that weren't being used by Alameda. Again, not clear yet. That they just pulled everything together, and there was no particular Bitcoin or anything else that you thought you bought on FTX that was being stored for you. That it was just a giant pool of cash that they were just abusing. And it's becoming clearer, even after Sam Bankman-Fried's tweets recently to a journalist, that maybe he constructed his whole personality as well, and that none of that was real. There is a cult of personality that happens in Silicon Valley, that we invest in the founders. That was the Elizabeth Holmes thing, right? The same thing was you appear like a genius, you act like a genius, people will give you money. And he's a smart guy, right? There's no doubting Sam's not a smart guy. What I think he saw, probably inadvertently, was that in banking, we'd gone through this, which was the banks used to be trading firms and would have customer. And there's famous shops like Salomon Brothers who were huge at this. And then what happened is they would abuse that because they wouldn't take the customer money. Well, they kind of would because it's all the same balance sheet, so the bank might blow up. But they would also trade against the customers. And then the regulator said, no, you're not doing that. Then 2008 comes along, so you've now got what's known as customer and house, and there's a Chinese wall. The wall means you two can't speak to each other because you have privileged information if you're advising, or you have balance sheet, etc. And you guys with the customers, we can't give it to the rest of the firm because we would abuse it. So that is fine, except that in 2008, the trading side blows up of the banks, and the customers are going to get hurt because everyone have to get bailed out. So then they changed the regulations and said trading has to be a much smaller part. In crypto, none of that exists. You can do whatever the fuck you want. I don't even know what you think was illegal. I'm not even sure using customer deposits is illegal in crypto because Gary Gensler and others had not regulated it. It depends what jurisdiction and how far their regulations got. But this is a problem. I mean, I got caught out in another one, a futures brokerage. I mean, this is not a crypto thing. This is a fraud, leverage thing. I got caught out in MF Global, which was a huge futures broker. And it was run by the ex-CEO of Goldman Sachs, who was the senator for New Jersey as well. I mean, this guy was one of the most powerful people in the world, John Corzine, super famous. And so I have my entire trading funds with them because it's John Corzine, it's MF Global, the biggest brokerage firm in the world. He gets confused and kind of thinks he's Goldman Sachs, takes a huge bet on European government bonds, blows up, and lo and behold, he's been using customer money. So it happens endlessly in the securities industry because that little pot of gold, which is customer money, people just can't keep their eye on the precious that's over there. They want it, they can use it, I can make return on capital, and then it goes wrong. So this story's as old as the hills. It's a deep fraud. It seems it's now on the scale of Bernie Madoff and Elizabeth Holmes and Enron. It's an accounting fraud. It's a cult of personality fraud. It's many, many things. It appears. Again, we don't yet know, but as the news flow comes out, it's staggering. So to go back to your earlier question, is what's the knock-on effect here from here? So my hypothesis is this was the final outcome. This was the whale that happened, right? The end of the crisis. So I think much like an earthquake, and for a week afterwards, you feel the aftershocks and you're like, oh my God, is this a bigger one? That's what's going on now. So yes, there are going to be some other firms that get into trouble, but pretty much all of the levered trading houses, the levered customers all got taken out quite a while ago between January and June. The levered trading shops, the people who were lending money to the trading shops, people like Celsius and BlockFi, all of those guys, they've all blown up. So who's left? There's a couple of trading firms like Jump and Genesis. That's it. So they will probably be smaller aftershocks if they failed. So what we've got is peak freak out because the earthquake happened and everybody's hypersensitive. I've never in my career seen sentiment like this, both in crypto and the stock market.
Really?
I mean, Twitter is so bad. I put up a relatively bullish chart, just marginally bullish, to say maybe the Nasdaq's priced in a deep recession. I must have had 100 comments of anger. How dare I suggest? I'm like, wow. People, I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it.
Is it already a bottom, or are we still waiting for lower levels? Should we start buying now, or we shall still wait? Let me know in the comments, what do you think? Thank you for staying until the end. Please like and subscribe if you appreciate my work.